My name is Gea Vy Alveri. Today we will discuss about capital market participants. The capital market is a place where various financial instruments such as stocks, bonds, and derivatives are traded. To carry out activities in the capital market, various parties are involved in the transaction process, investment, and market supervision. Here are some capital market participants or parties that play an important role in the capital market. Key elements in a capital market include 1. Investors. These are individuals or institutions that provide capital by purchasing securities, stocks, bonds, etc., in exchange for potential returns. 2. Issuers. Companies, governments, or other entities that issue securities to raise capital for various purposes like expansion, operations, or debt repayment. 3. Securities. The financial instruments traded in the capital market, including stocks, equity, bonds, debt, and other investment vehicles like derivatives. 4. Market participants. Brokers, dealers, investment banks, and financial institutions facilitate the buying and selling of securities. 5. Exchanges. Organized platforms, like the New York Stock Exchange, NYSE, or NASDAQ, where securities are listed and traded. 6. Regulatory bodies. Organizations such as the Securities and Exchange Commission, SEC, in the US, or similar bodies in other countries, that regulate market activity to ensure transparency, fairness, and investor protection. 7. Liquidity. The ability to quickly buy or sell securities at a fair price. Liquidity is crucial for market efficiency and investor confidence. 8. Market instruments. These include debt instruments, like bonds, and equity instruments, like stocks, as well as derivative products used for hedging or speculation. Capital markets can be broadly classified into two types. 9. Primary market. This is where new securities are issued for the first time. Companies, governments, or other entities raise capital by offering new stocks or bonds to investors. The most common process in the primary market is an initial public offering, IPO, where a company goes public by issuing new shares to the market. 10. Secondary market. Once securities are issued in the primary market, they can be bought and sold by investors in the secondary market. This is where the majority of trading occurs. It includes stock exchanges like the New York Stock Exchange, NYSE, or NASDAQ, where investors trade previously issued stocks and bonds. The secondary market ensures liquidity and price discovery for these securities. The capital market has several main functions, including channeling funds. The capital market allows companies to obtain funds from the public by selling stocks or bonds. Liquidity. The capital market provides liquidity, which is the ability to buy and sell securities easily, determining the price. The price of a security in the capital market is determined by the supply and demand mechanism, increasing transparency. Capital market regulation ensures transparency in the financial information of listed companies. Stock exchange is a place where securities are traded. In Indonesia, there is the Indonesia Stock Exchange, IDX, which is a place for trading stocks and bonds. In the international world, examples of famous exchanges are New York Stock Exchange, NYSE, and London Stock Exchange, LSE. The capital market is regulated by government agencies that function to maintain the integrity and transparency of the market, as well as protect the interests of investors. In Indonesia, the institution that regulates the capital market is the Financial Services Authority, OJK. OJK has the authority to regulate and supervise all activities in the capital market, including the issuance of securities, trading, and securities company activities. Capital Market Index is an indicator that shows the performance of a GRU.